Hello there, this is James and you're watching Tixee Live. And a very good afternoon to all of you, and all of you a very happy Monday. In today's program, I wanted to have a quick little do an update from this morning's broadcast, because the market is still very much licking its wounds, but it's trying to bounce back, as well as that, some other few developments which have occurred today as well. But before we get into all of that, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. With that out of the way, let's do that again. With that out of the way, that's better. Let's get started. Okay, so basically, as it stands, the market is still licking its wounds from the carnage from Friday. I mean, following Powell's brutal speech on Friday, the markets are now pricing in a 64.5% chance of a third straight 75 basic point rate hike on September the 21st by the Fed. And the expectation overall is for the interest rates in the States to be at 3.75% by the end of the year. Now, following on from Friday's speech at Jackson Hole by Powell, the market is very, very fearful that we're going to have a very tough September, And we can see this by the fact that the VIX, and I'll explain to you in a minute what the VIX is, it's actually hit a 7-week high of 27.39. Now, the VIX, for those who are new to trading, it's also known as the volatility index and the fear index. Okay, and basically, it's an index which is calculates the number of puts against the S&P 500. Now, obviously, put options. You buy put options when you think something's going to go down. So, obviously, if there's more puts being bought against the S&P 500, it means the market is more nervous, hence the VIX going up to the 7-week high. So clearly the market is very, very nervous. As well as that, the dollar index. Now don't forget, this is the index which measures the strength of the dollar against 6 major currencies: the cable, or the sterling, Japanese yen, the euro, the SEK, the Swiss franc, and the Canadian dollar. That's actually hit the highest level since September 2002. Again, that shows that there is fear in the market, because don't forget, the dollar is a safe haven. In fact, the dollar index actually rose to 1.0947. And like I say, that's the highest level it's hit or been at since September 2002. Right, in other news, let's talk about another central bank. Chief economist, ECB chief economist, Philip Lane, he said today, and I quote, "A steady pace that's neither too slow nor too fast in closing the gap to the terminal rate is important for several reasons." He also went on to say the appropriate size of the individual increment will be larger the wider the gap to the terminal rate and more through to the risks to the inflation target. He also went on to say, and this is important, while the upside risks to inflation are more intense than downside risks. In other words, he's underlining the fact the ECB's need to raise interest rates. He's saying a steady pace, but he says they desperately need to do it. Now, there was a lot of chat, certainly over the weekend, okay, with the Jackson Hole symposium. There was a lot of chat that the ECB might increase interest rates by 75 basic points, like the Fed is expected to do. So there is that sort of rumor they could do 75. I think the general consensus, they probably would just do 50 or maybe even 25. I hope not, because 25 will be very dovish. But there is rumors they could do 75. Now, obviously, all eyes are going to be, of course, on the 8th of September. That's when the ECB meet again to make their interest rate decision. Another news. Bitcoin is trading at the lowest level since mid-July. Not a surprise, as we do have a lot of risk-off appetite in the market. And I'll bring up the markets now, actually. Let's have a quick look at the markets now, see how we're doing. So let's start off with the euro. The euro is currently trading at 1.00116, so slightly above parity, 16 pips above parity. So it's trying to bounce back. There is that key level again, which is above 1.0002. So it's trying to bounce back from obviously the carnage on Friday. But like I say, I think this may be short-lived, or might even be known as a dead cat bounce. But we have to keep an eye on how much he can stay above this level of 1.0027. Same with the sterling as well, the cable, British pound, US dollar. That's trying to bounce back as well. Currently trading at 1.1735. This is pretty much, I think there's a lot of dip buying going on. So this is why it's giving a bit of a boost as well. Dollar yen it's sold off a little bit. So a little bit of profit taking as well, I think, with this pair. Currently trading at 138.42. Gold is trying to bounce back a little bit as well. Currently trading at $1,744. Don't forget, the key level for me for gold is really $1,791. If we can break through that clearly and cleanly, then we could see a good run to the 1800 levels. Bitcoin, as we were talking about, let's bring Bitcoin up, is trying, like I say, to get back strongly above 20,000 level. Currently, it's got that key area of interest for me, $20,335. Like I say, it did fall under 20,000 on the back of the carnage from Friday, so it is trying to bounce up. S&P 500, trying to do a bit of recovery today, 4,045 points. Same with the NASDAQ as well, trying to recover slightly, currently trading at 12,587 points. So in general, the market is still very much licking its wounds, which is not surprising. Bit of dip buying going on, I think, at the moment. That certainly is trying to help it and give it a bit of a boost back. But in general, it's still recovering. Probably the worst hangover ever for what happened on Friday. In other news, which is what I'm quite concerned for the euro about this. This is why I think the euro will come down and test parity or fall down parity once again. The Belgian energy minister, Tijn van de Straten, has warned that Europe faces 10 terrible winters. So 10 years of terrible winters unless it can get a hold of its grip of gas prices. So that is frightening. So it's not just this winter, he's saying for the next 10 winters. So this is a serious issue facing the EU at the moment. This is why I think the euro, though we're seeing a bit of dip buying with the euro and it's trying to bounce back, I think maybe in the medium to long run, we can see it fall under parity again pretty soon. Other major events happening in the market this week. Don't forget, German CPI tomorrow, German unemployment rate, EU CPI, German retail sales, US ISM manufacturing, PMI, US NFP, and US unemployment. And don't forget, I'm doing the watch along on the NFP at 12:20 p.m. Because I think the job market is the key this week. It's absolute key. Don't forget, Powell also said he's prepared. He said this on Friday. He's prepared to let the labor market soften just to get his mission done, which is to bring inflation down to 2%. The markets, as they currently stand, FTSE currently trading negative at 0.66%. DAX currently trading negative 0.64%. And Eurostock 50 currently trading at slightly higher 0.24%. Don't forget, you can ask me questions anytime you wish. It is a live broadcast after all. Or simply say hi. In fact, there was a question from Philip, actually, which I missed this morning when I went off air. And he said something about, he asked me about my new channel, which I don't have any other channels. The only channel I broadcast on is the Tixee Live, which is on the Tixee official Tixee YouTube channel. But of course, I am doing a new Tixee Live series, of course, which is called #AskJames. That is, I'm doing an episode this week actually on that. I'll be announcing when I'm going to be doing that tomorrow. And don't forget, that's an educational video. That's where I focus on a topic of your choice. And I'll do an educational coverage of that. Like to say, this week, the one I'm doing this week, Jay Davis wrote in and asked me to do a video on candlestick patterns and candlesticks in general. So I'm going to be doing an educational video this week, live, of course, like Tixee Live. Live means live, and I'll be covering candlesticks. So please come and join me for that. I'll let you know when I'm doing that. I'll probably let you know that tomorrow. Okay, don't forget, like I say, you can ask me questions anytime you wish. As there is no questions, if you think of a question later, okay, jot it down in the comments on either Facebook and YouTube. I will see it, and I will reply to it next time I'm online, which of course is tomorrow at 8 a.m. UTC to cover the European session, and again tomorrow at 2 p.m. UTC to cover the US session. Let's see if the dip buyers can continue. And don't forget, the UK is back tomorrow. It's on a bank holiday today, so the European trading session should be a lot more volatile with the UK backing action too. Okay, if there is no questions, not a problem. Not a problem. Don't forget, if you're watching me on Facebook and you've enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you've enjoyed this little video, subscribe if you like. Hit the notification button so you know next time I'm going live. If you enjoyed this video, put up with me, my over-the-top enthusiasm, which I just simply can't help because I love the markets. Give me one of these. It's nice to know that you like what I do. I see I've got a couple of likes already, which I really appreciate it. And I really appreciate every single one of you coming along to watch me. I really do appreciate it because these programs and these videos are made for you. So please, thank you for coming along. Anyway, as I always say, till next time, don't forget these little videos are for educational purposes only and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.